Hello traders, and welcome to my video on the wedge pattern. In this video I'm going to show you how you can catch moves such as this one for over 300 pips, this one for over 250 pips, this one for over 100 pips and more. So what is the wedge pattern? The wedge pattern is basically two lines drawn on your charts using resistance and support that form a wedge pattern. So an angled pattern using the two lines of support and resistance. This can be found in a bullish market, a bearish market. It can be used on any trading instrument and any chart time frame. I'm trading the euro dollar 1 hour chart here. I like to use the 1 hour charts and above, sometimes the 4 hour and the daily, just because I find their signals tend to be more reliable. This is primarily due to the fact that there's more price data contained within them. And it also means less time watching the charts, which is great. So one thing about this pattern, it can be open to interpretation. I've drawn these wedges how I interpret them. I don't overcomplicate things with my trading. I'm not looking to put 100 different indicators on the chart or to use any crystal ball indicators that are going to have 100% win rate. I just know that doesn't exist. I just feel like with basic price action analysis and sensible money management, you can catch some good moves, as you're going to see in this video. So we've identified that we're in an uptrend here. You can see the lower highs here is a pullback, but still higher lows. So price is consolidating, however, is still going in an upwards trajectory. So we're going to look to trade on the breakout of the wedge pattern, which is here. If we zoom in, you can see that this was a substantial breakout. We were into this big move for potentially of over 100 pips. And what we could have done is, when we had taken the entry, we could have placed our stop loss just below this low here. So we would have had a relatively tight stop loss of around 10 pips, which is really good for the 1 hour charts. And as price was moving up, you may have wanted to have trailed your stop loss to below the levels of support. When price came up around here, you can see that it's consolidating. We've got some bearish candlestick patterns. I've got many videos on candlestick patterns you can watch. May have been an indication that perhaps this particular move was coming to an end. Nonetheless, still would have been ample opportunity from here to here. So yeah, that's really the basics of the wedge pattern in a bullish trend. As we move along, I've marked off another one here. I tend to zoom out when I'm marking them just because I think it makes the overall picture clearer. As you can see here, again, lower highs do actually have higher lows here. You have ascending wedges and descending wedges as well. Either way works. It just depends. The most important thing is which direction you're gonna look to trade in, and I base that based off the trend. We can clearly see here, looking at the chart, that the market is in an uptrend. So we're going to look for long trades, and then we just need to draw the wedge pattern accordingly using the resistance and support levels. Okay, so again, this would have been another powerful entry had we entered here. You can see that this is over 250 pips worth of potential in that trade. We could have again used the stop loss below the recent low of support, which would have been around 25 pips, which is still a reasonable stop loss for the 1 hour chart time frame, especially when you consider that this would have been a 10-to-1 risk to reward ratio trade, considering how far the trend eventually moved. If we zoom in, you can see here you've got some bullish candlestick patterns and price action. Support's holding up well. Higher lows. The market's getting squeezed. Eventually, there's a nice breakout to the upside. Again, you could use the lows of support for your stop loss. So as price is moving up, you can move your stop loss here. and to here, below this level here. And then you might be looking to exit once you see either this consolidation here. There, the market's looking overbought. You've got the M pattern forming there, suggesting for the M pattern. I do have a video on the M pattern if you're interested in it, but basically can see from the resistance there, price came up here, down, back up, and down. Okay, M pattern, breakout below there. Nothing to do with the wedge pattern, but it's just another pattern to be aware of. It would be rude of me to just ignore it when I've seen it there. I think it's important you know as much of these patterns, chart patterns, as possible. I do have videos on many different chart patterns, candlestick patterns, and I will continue to do more if you find them useful. Okay, so you can see just the wedge pattern there can give really good, strong signals. I mean, some traders would even, you know, I'm trading from a distance there, but you could also zoom in and, you know, some traders will even do small wedge patterns like this one here. You know, you don't need to zoom out so far. It just depends on whatever works best for you. I just find that if I can include more price action, that the signal, the pattern's going to be more reliable. Okay, especially on the higher chart timeframes, as I mentioned. So that is a couple of bullish wedge patterns, ascending and descending. Now, if we look, I've drawn this M on here, so let me just get rid of that to make the chart easier for you to see. This one as well. You can keep the resistance there because we see the price is making lower highs, so we're expecting a downward trend to commence. You can always add an indicator to your chart if you like, just for further visual confirmation. I mean, it's not really going to tell you much more than you can't see from looking at the chart, but the MACD is below the signal line, which suggests a downwards market, then eventually crosses below the zero to confirm that. Momentum starts building. We also have divergence, lower highs. Again, you can see that by looking at the chart, but some of you maybe want it clearer, as shown by an indicator. I don't, to be honest, find the indicators show you much more than you can see by looking at the charts yourself and drawing your own lines, but it's convenient for some of you, and they can at times give good confirmation of trades, or just help you stay out of trouble by filtering false signals. So that being said, we have our wedge pattern here. We've marked the resistance, marked the support, and then you can see there's quite a substantial breakout there, which emphasizes that perhaps there are quite a few traders watching this particular wedge pattern, looking to get in on this downwards move near the top here, especially after that bull rally that we just seen. And yeah, I mean, this would have been another good short trade over 100 pips, 90 pips here. We probably would have been out by now, because we're not going to hang around, leave our stop loss there and wait to get taken out here. Probably will have maybe taken some profit on the way down, allowed some of the position to run, and I don't know, when price was around here, certainly my stop loss would have been up around here somewhere. So especially after this candle here, probably would have been taken out. Still with a decent amount of profit. A quick, easy trade there. Again, as I said, open to interpretation. Some traders may have marked this. This is the wedge pattern here. Also, that's a strong level of support. So once it is breached, there is quite significant downwards momentum. Yeah, so it's not all cut and dry. There's different ways to interpret and mark the wedge pattern. Couple more examples for you here. With these, we can see the market has rejected this has not made it past this resistance level twice. It's formed a nice triple top candlestick pattern. With the triple top, you look to break out the support level, which would be around here. However, there is a nice wedge pattern there, which would have got us in slightly earlier. let's remove that one. So from resistance, price begins to fall, MACD below 0. If you need that extra confirmation, we have our divergence there, slight blip here, but that's just from the stagnation that we've seen. And yeah, a good breakout. I mean, usually when you see a breakout powerful like that, it just tells you that the pattern has had a self-fulfilling prophecy. Perhaps lots of traders are watching them. And it's just why they're such popular and long-lasting forms of market analysis. They contain what's happening right now rather than what's happened in the past, as can happen with lagging indicators. Again, another wedge pattern there. Descending wedge, wedge in a downtrend, and the breakout again. Big bar there. With both of these, we could have used a stop loss the other side of the previous high. So you're looking around 15 pips on that one. And around 20 pips on that one. Still really decent stop losses for the 1 hour chart time frame, and gave us ample opportunity to bank a good amount of pips on the way down. In fact, had you taken the first wedge pattern on this particular move, be looking at over 200 pips. The second one, 150 pips. And I'll just draw you one here now. That's more of a diamond pattern, but you know, still same principle. You're just looking for a breakout of the support and resistance. So, you know, the wedge pattern, I think every trader should know what a wedge pattern is, should know how to draw it, and should draw it. I mean, unless you're trading maybe a ranging market and a tight consolidation, the wedge pattern, I think, is a vital tool for trend traders, and it's also free. You don't need any special indicators, no, you know, wizardry, no magic, no crystal ball, nothing like that. You just need drawing tools, which you can find on all your platforms. This is the MT4 platform I'm using. I'm old school like that. And yeah. So there's the wedge pattern. Again, open to interpretation. So maybe looking at the longer term picture and see this wedge pattern. Many different ways you can interpret it. That's why I think it's key to have good money management. Yeah, sometimes I do feel like if you're looking to trade into a downtrend, wedge pattern or not, I mean, you can just draw a support level, wait for it to be tested, and we're perhaps late. We would have liked to have got in somewhere around here, but I just want to emphasize the fact that you don't necessarily need, it doesn't need to be a pattern. You can just see from support here, 1, 2, 3, you know, and then the breakout below the support becomes resistance. Sometimes just a simple support or resistance line can do the same thing. Nonetheless, it is a good idea to have a good understanding of candlestick patterns and price action, so on and so forth. Okay, well, I hope you found something useful in this trade, and you should have an idea now of how you can draw wedge patterns on your charts and look to catch some big trends like we have in this video. Please like and subscribe. Thanks for watching, and I'll catch you on the next one.